day, everybody, and welcome to the VectorVest International User Group Forum. Can't believe summer is over, and look at that, Saturday, September 6th. Summer holidays are done. All the kids are back in school. Hopefully everybody is doing well. Hopefully everybody had a good summer. I know it's not officially over till near the end of September when fall begins. But we are seeing the signs all around already. All right, let's just check out some of the folks in the room. So we do know we have people from all over. Hey, Neil. So we've got Neil from Toronto. There's Gil from Montreal. Carol, good to see Carol. Augusta, Georgia. And from Belgium. So you start getting the international flavor. Bruce, good to see you. There's Marv. Uh, Christian from Vancouver. There's Alan from Melbourne, Australia. Good to see you, Alan. Haas from Decatur, Alabama. There's Dave from Burlington, Ontario. We've got Marty, the governor, from the GTA area. All right, so let's start going ahead here. There's Delaware, Ontario as well, coming into the house. All right, so folks, as everybody knows, there is, or this is on the VectorVest YouTube channel. So make sure you turn your computer speakers up so you can hear the audio portions. And the recording for this will be available shortly after the webinar is done. But let's start getting through our slides here. Here is our risk disclaimer. So as everybody knows, there is risk in investing. Everything you will see and hear today is provided for educational purposes only and should be never considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so we've got that out of the way. Here are some instructions for folks who find the video resolution a little too poor, too blurry. Here's what you'll need to do to fix that. All right, so to adjust the video quality, locate the gear icon. So I know people will be watching this in many different ways. These screenshots are taken from a laptop computer, but you locate the gear icon. You can see in this case, it happens to be right down there at the bottom. You'll click on that and that'll open up a menu, and then you can see to locate the quality option right down here. You can see the current settings for mine at that time were on auto and 720p. All right, but if you do click on quality, you'll get a menu like this show up. You can take it off auto and actually choose something like 1080p or something better than what yours is chosen. So select the best option for your network parameters and viewing pleasure, click on it. In my case there, I went with 1080p and you can see now I have an HD indication on my gear icon. All right, so hopefully that helps people with video resolution. Always seems to be an issue that pops up during the webinar. So folks, here is our agenda. Once again, my pleasure to be able to be hosting the International Forum for everybody. So we will take a look at all of the markets, the VectorVest markets around the world. We'll do some trade ideas, and then our keynote presentation. I'm joined by none other than Ms. Susan Hayes Culleton, Managing Director of VectorVest Europe. And folks, Susan is a woman on the move. She's been around, around different parts of the world, and is going to have a lot of course, I know Susan says earnings season never ends, but we are getting near the end of Q2 and will blend right into Q3 earnings season. So her keynote presentation entitled Navigating Earnings Season with VectorVest. And I know, hey, it's an interesting, strange world we live in, folks, getting stranger all the time, all kinds of things going on out there. I know overall, there is concern, more and more concern about rising bond yields in France and the UK in particular. I think Susan will be talking about France more than the UK picture. But the other thing of note is, how much political turmoil they put up in front of us these days. All right, but all of that before we adjourn around 12:30. As I mentioned, with this being on the VectorVest YouTube channel, the replay will be available shortly after the webinar is done. All right, so with all of that said, let's jump right into the content. Actually, before we jump, I do want to make sure I mention a few things. So the Australian group ended up arranging, so they have a VectorVest Australian Online Investor Club. So Russell Markham and I think it's Alan McKay and the rest of the Australian group were able to arrange fellow Australian Daryl Guppy to come and present at their August meeting, and invitation was sent out to everybody. So I'd really like to thank them for that. Was able to attend myself, and actually Stan attended that as well. Very, very good presentation given by Daryl Guppy. If you haven't been able to catch that, definitely look for the replay to be able to watch that. And of course, Daryl Guppy, the creator of the Guppy trading system. All right. So once again, thanks to them for hosting that and having such a great presentation there. All right. So notice a bunch of other people coming in here too. Just taking a look. So yeah, we've got Tom from Burlington. Looks like Tony from the Ottawa area. Jerome from Cape Cod, Massachusetts, and Joseph from Long Island. Actually, is Jay from Long Island out there as well? I see Stuart there as well. I think Stuart from Calgary. All right, and yeah, Alan. So Alan Johnson mentioning the Australian group there as well. All right, so let's start going through here, folks. We have to make sure we give Susan plenty of time for her presentation. So let's kick off the global market review, and we're going to see quite a few changes between the nations this time around. We're going to start with Canada. So here you can see the Canadian color guard. You can see as of Friday, 3 ticks into the green, and guidance that reads the color guard is bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Folks, you notice the other thing in the extended version of the color guard here in Canada is once again the lack of any red lights in that approximately 2.5 week trading time here. With 3 green lights across the top, we also know, and it includes the MTI, so if all 4 of the indicators up day over day and week over week in the Canadian market, you can see they're in an up situation, short-term uptrend in an underlying uptrend. Yeah, with everything going on the way it is, I know it doesn't appear every day like the market's going the way we want, but you can see all of the green lights that they've been able to string together in the Canadian market. 4 in a row back here, 3 in a row this week, and you can see the addition now of RT Kicker combo timing system confirmed green lights, 3 in a row in the Canadian market. Definitely being buoyed up by commodities for sure. I think on Friday we did see Celestica really made a push and ended up getting to the top of the VST list. It decided it wanted to battle out with all those gold stocks at the top of the VST list. All right. So year to date, the Canadian VectorVest Composite up 11.65%. And here you can see a summary of all of our proprietary market timing signals for Canada. Confirmed calls have been up since the 2nd of May. DEW since the 28th of April. The green light buyer turned up again on the 3rd of September. the primary wave up since the 21st of August. All right, so everything green there. If we now jump over to the US, here's the US color guard. Now, you can see the market timing gauge needle one tick into the green in the US, and guidance that reads the color guard is mildly bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. And you can see a bit of a difference. There have been red lights creeping in. Some of them they put behind them, but even recently, they've gone from red lights in the price column to a green light. And then look at that on Friday, an RT kicker combo confirmed green light to boot. All right. One of the things I didn't mention on the Canadian side, the Canadian MTI has stayed elevated for quite some time. So 1.20 to 1.30 and above is where we give the warnings for the Canadian MTI level of a possible toppy market and a market that may be searching for a top. All right. We're not seeing that on the US side at this point with the MTI at 1.28. They do remain in an up situation or are back in an up situation. There has been a bit of oscillation of the primary wave. All right. But they are back in an up situation. You can see the VectorVest composite year to date at 8.51%. And here are the market timing signals on the US side. So the confirmed calls have been up since the 22nd of August. The DEW turned back up on the 12th of August. Green light buyer turned up on the 4th of September. And the primary wave turned up on the very same day. All right, here's a summary of what we saw in August in all of the nations. So you can see, it looks like the US led the way in August, up 3.31%, followed by Canada at 2.1%, Australia at 1.15%. The European Union put in a little bit of a negative number, down 0.11%. Year to date, here you've got the numbers. So we talked about Canada, the US already, and we'll see Australia and Europe in the next two slides. But here you can basically see, well, they've gone in order from top to bottom. So Canada leading, the US coming in second, Australia coming in close behind at 7.22%, and the European Union at 5.45%. Remember the European Union outperforming last fall into the beginning of the year. That seems to have faded somewhat here. All right, so Australia is the next one up. Here you can see their market timing gauge needle straight up into the yellow. Guidance that reads the color guard is neutral. VectorVest does not advocate buying any stocks at this time. All right, so you can see the differences already between the nations. There's that 7.22% year to date for the Australian VectorVest composite. And you can see the three yellows across the top. You can see they're in a down up. All right, so short-term downtrend in an underlying uptrend with their MTI still up above 1 and up at 1.21. Australian market also lacking any red lights in the extended version of the color guard here. All right, most likely being helped by commodity stocks as well to a certain degree, but we can see not quite to the same level as the Canadian market. All right, here is the market timing signals there. So the confirmed calls have been up since the 1st of May. DEW since the 29th of April. Green light buyer has been neutral since the 28th of August. And you can see their primary wave turned down on the very same day. So with the primary wave down, that's where you have the guidance of not VectorVest not advocating buying stocks at this time. All right, that brings us to the European Union. You can see market timing gauge needle one tick into the red, and guidance reading the color guard is mildly bearish. VectorVest does not advocate buying any stocks at this time. And here you have the 5.45% 4 or 5% for the European Union VectorVest Composite year to date. And there you can see too, so we've kind of transitioned. They were getting RT kicker combo confirmed green lights back in this area here. Transitioned to yellow, ended up getting a red light there, and then an RT kicker confirmed red light on Friday. And really of note, and we've seen this in all the countries, a lot of movement between the BSR and the MTI, even on a day-to-day basis. But take a look at the European Union. We were talking about the highly elevated levels of the BSR. And you can see, just in this extended version, they came from a high back on the 22nd of August of 4.70 for the buy to sell ratio, and actually hit a low in that time frame of 1.16. They've bounced off of that somewhat, but you can see lost quite a bit of ground from Thursday to Friday, from 1.47 to 1.39. And you can see the MTI as well, coming down from levels of about 1.43 to 1.12. All right, they're in a down up situation as well. And if we look at their market timing signals, you can see at this point the confirmed call, the only one remaining up, that's been up since the 29th of April. The DEW turned down on the 2nd of September. The green light buyer, neutral since the 29th of August. And you can see their primary wave turned down on the very same day, the 29th of August. All right, so that's a quick run through the color guards for all of the VectorVest nations. There was a bit of a time there where we were seeing quite a few similarities, but you can see we're definitely checking some differences now. All right, let's take a look at the market timing graph. This one is Canada. Here you can see Canada continuing to put in new 52-week highs. Did so on Friday once again. You can see put 3 up days together pretty nicely there. A lot of moving sideways in the markets, a lot of consolidation periods, and what we're typically seeing is a real lack of momentum, even though the market is continuing to move in an upward direction here. All right, you can see all of our proprietary market timing indicators operating above the value of 1 in Canada. And if we're looking at support and resistance here, you can see resistance at the swing high from Friday. And the default settings have quite a difference between resistance and support here, quite a distance to go. So we do have some other levels marked off here. That would be obvious levels. We would look to find support. You could see this first level right around here. That would be the first one to keep an eye on when the markets open again next week. All right, so that's the Canadian picture. You can see the last confirmed call that came in here as well. Here's the US. So the default settings of the support resistance indicator are working a lot better here on the US side. You can see they were able to put in a new 52-week high on Friday as well. Ended up with a doji. So that's the resistance level they're going to need to be able to push through. And you can see a really nice close level of support right here with this old top area. You can see how it has come in and been tested right back in here. The market did bounce, was able to put in a new high. Remains to be seen whether that can continue next week. And you can see another fairly nice level of support right down here. At this point, you can still see all of our market timing indicators operating above 1 in the US market. Here's Australia. So here you can see we're not dealing with highs put in the last few days. There you can see when the most recent high was put in the Australian market. And you can see that kind of like the Canadian market, if I use the default settings, resistance and support have a bit of distance to them. So I've nailed down a pretty nice area here, this first level of support. You can see that's already been tested 3 sessions ago. The market is attempting to bounce from there. So if you can keep moving higher, you'll need to try to push through resistance here. And you can see another level here with a nice old top area here. You can see came into, had some influence in this area here too that we look at. You can also see the 65-day moving average moving through there. All right, all of their market timing indicators operating above 1 at this point as well. And here you can see the confirmed call, the last confirmed call that came in Australia. Here's the European Union. So pullback scenario in the European Union as well, just like Australia. And here the default settings of support and resistance working fairly well. You can see that right now they did come back and actually break through support at this level. All right, bit of a fake breakdown possibly. You can see the moving average in play there as well. Intraday kind of closed below that level, but you can still see them operating within the overall zone here. And as of Friday, still within that zone. All right, so look like they're trying to come back above this level as resistance at this point. And if they can push through that, you can see close level of overhead resistance here, and you can see the other levels of support down below. All of the market timing indicators operating above 1 in the European Union markets as well here. All right, so that takes us into the global market tracking ETFs, these found in the US software. So July we covered, so pretty good, pretty big difference between July and August. You can see July turned out to be red with 19 winners, 24 losers. August, quite a bit better month for these global market ETFs. You can see out of the 43, 39 winners, 4 losers. And you can see the top 10 here. So we do have Peru, Brazil, Chile, South Africa, and the Russell, the IWM, rounding out the top 5 here. You can see the rest of the players there. So it looks like Peru and Brazil both over 11% gain for August. As a basket, they came in at 3.95%. Against the VectorVest composite, which came in at 3.31%. So a little bit of outperformance there for the basket. All right, and here we can see that August picture again put up against the year to date on these vehicles, on these ETFs. All right, so year to date, you can see that out of the 43, pretty good, 41 winners, 2 losers. As a basket, 22.81% versus the VectorVest composite at 8.51%. So quite an outperformance there year to date so far. And here, rounding out the top 5, you can see Greece coming in with 63.44%, Poland at 54%, Spain 53.3%. There's South Korea coming in with 44.68%, and Peru rounding out the top 5, coming in at 42.63%. So pretty good performance so far year to date on those. Here are the market sector ETFs. So once again, these in the US market, you can find these under in the cherry picking watch list folder. All right. And well, I don't think it's any secret to anybody at this point what kind of year gold is having. Actually, more than a year gold has been running now. So although I love my gold gains, I am a little bit concerned at why gold is running so much. We know about elevated debt levels in governments, the concerns with interest rate levels last week, for example. I think it was the Friday right before the Labor Day weekend in the US and Canada. After the market closed, uh, there was a ruling from the one of the U.S. courts, an appeals court, striking down the tariffs. And so when the markets opened back up on Tuesday, there seemed to be some concern about, well, what happens if the tariffs are deemed illegal? Are they going to have to be paid back? And the 2, 10, and 30 year on the U.S. side, the yields were all up over 1% at one point on Tuesday, and the markets put in a down day that day. So lots of concern, and gold continuing to move higher. You can see the market sector ETFs as a basket year to date. Out of the 30, we have 28 winners, 2 losers, and as a basket, putting in a 14.44% return against 8.51% for the VectorVest composite. And there you can see GDX for the gold miners in the US getting very close to 100% return at 95.64. You can see metals and mining, XME, the ETF there, up 47.89%. Still interesting to me that with the drill baby drill administration on the US side, how we've got solar and clean energy right up, coming up in third and fourth here. You can see their returns, and then next gen media rounding out the top 5 there, over 23% return. You can see semiconductors, US telecom, communication services, industrial, and home builders rounding out the other in the top 10. All right, and then if we look at those market sector ETFs and see which ones have been moving in the last 10 days, there you can see GDX still out in front, 11.89%, but there you have TAN coming in at 11.16. Home, so ITB for home, 8.78. Metals at 8.31, and there you have home builders again, XHB, rounding out the top 5 at 7.21%. So a good way to keep an eye and see what sectors are moving in the short term here. All right, so let's go into the central bank announcements. So we've got August behind us, and main players we were looking at in August what was the Bank of England. So we saw them cut rates 0.25%. The Royal Bank of Australia also cut rates the same amount. And I think those were the main ones we were looking at there. September, a little bit more of a full schedule here. So we do have the European Union kicking off September. That'll be this coming Thursday already. All right, so keep an eye out for that one. European Union Central Bank, and then you can see the 17th, going to be a pretty key day there. We've got the Bank of Canada and the US Fed both coming out with their interest rate decision. So that's the following week. And then you can see on Thursday, Bank of England again, and the Bank of Japan. Everybody knows, I think, how important I think Japan is in the overall picture here as well. And then we can see getting closer to the end of the month, the 29th of September, we've got the Royal Bank of Australia again coming out with their interest rate decision. All right. On the US side, it seems like we're somewhere around the 90% range, folks expecting a interest rate cut in September. The job numbers were not good coming out of the US This last week, of course, we know all kinds of issues with, how accurate the data is. So we've already had somebody within the BLS lose their job in the last few weeks, and they've been replaced. But the number has missed quite a bit again on this past week. So once again, we'll also have to see how big the revisions end up being, as that's been part of the story. All right, so definitely some worries now. Everybody's been espousing the job market for quite some time, but there's definite worries, and it looks like some cracks appearing in the job markets. Not just in the US, Canada, the unemployment rate quite a bit higher than the US, and in other parts of the world as well. All right, so that's the central banks. Let's look at the summary of the VectorVest essays from around the VectorVest world. Another excellent week of essays here, folks. So we've got the summary here out of the US. Angela Akers wrote one entitled Winners During Earnings Season. So how to use VectorVest and the Unisearch tool to find winning stocks during earnings season. Out of Canada, Don Reitzma wrote one entitled Using the VectorVest Stop Price and Sell Rating in a Trading System. So how to use the VectorVest Stop Price and Sell Rating to help preserve profits and maximize gains. And look, we have her here with us, but Susan Hayes Culleton for the European Union wrote one entitled Analyzing Different Choices, How to Use VectorVest to Extrapolate Without Bias Various Investing Approaches and Strategies. And then out of Australia, Robert and Russell Markham wrote one entitled Rising CI, Your Runway to Success. So how to use the VectorVest CI indicator to find consistently rising stocks that should read in rising markets. All right, so once again, another great week of essays. Hopefully folks have been able to check out at least some of those already. If you see another one or two or few that interest you, just know you can go and log into that country, into the VectorVest 7 software, into that country by choosing the flag on the login page, and then navigating to the views tab and last Friday's views to check out the essays. All right. Well, we're in a new month. We've got the September almanac here. And typically, I think most people know September doesn't line up too well. So you can see from Angela's essay, her roundup here of the September almanac. And typically September touted as a worst performing month of the year. You can see, according to Hirsch and Mistel's Stock Traders Almanac 2025, September is the biggest percent loser on the S&P, Dow, and NASDAQ since 1950. All right. And the reasons, the possible reasons given for that. However, she does go on to say none of that means that September has to be a losing month. So according to VectorVest Almanac, over the last 29 years, the VectorVest composite has gone up 15 times with an average gain of 3.26%, down 14 times with an average loss of 5.36%. All right, so although the average severity of a losing month outpaces that of a winning month, still hope for the September almanac. There's always hope, folks. Here's the earnings update. This was the last one for the current Q2 results, and you can see at that point 98% of the S&P 500 companies had reported. So that number will be a bit higher after last week, and you could see at that point 81% had beat on both the top and the bottom line. This week's essay had a FactSet estimate for the upcoming Q3 2025 earnings, and you can see the earnings growth expected to be about 7.5% for the Q3 earnings period. All right, so that brings us to trade ideas here. I'm going to jump into the US software first. So let me bring that up, we're going to go to the viewers tab here, and I'm going to have to go to viewers home. And we'll pick our watches. Now, I should state in all cases, folks, for those wondering, if I go into the Unisearch tab, I picked on a ProTrader search, actually one of my favorites for trade ideas this week. And we do know we have those different, kind of different market conditions we're looking at in the different nations. It seems like, at least for Canada and the US, there is guidance to be able to buy stocks, where the European Union and Australia, there isn't at this point. So I'll point that out, but ProTrader, and I use the stochastics crossing above 20 search. All right, so if I graph these on the US side, probably I've got the MPI on here, but we're not using that in this case. So I think I'll go with the VectorVest layout here. I'm going to take the stop price off. We're going to get earnings per share on, because no matter what I look at, I always want to see earnings per share. I will put the earnings indicator on as well. We know we are drawn to the close of Q2, but we'll be getting into Q3 just to get an idea of who has earnings coming up. And since we used stochastics, we can put stochastics on now. Now that ProTrader search, just looking for stocks where stochastics have crossed above 20. So in this case, we're looking for stocks that have pulled back or been consolidating enough where stochastic has dropped below 20, and have typically started moving up again, for stochastics to go across back above 20. All right, so you can see with AES here, Advanced Energy Industries, electronic semiconductor, and you can see one of the things that I like about this one is with this most recent pullback, you can see that they've come back to a nice level of support here, 144.58. You can see they retested it here. And folks, we all know the late, great Dr. David Paul loved his Wyckoff Springs. Well, if you look at AEIS, you can see they came up. 144.58 was resistance through this period. They were able to come up, push through that, put in a high. They pulled back, bounced, weren't able to put in a new high, came back, retested 144.58. And you can see for the last two sessions are trying to bounce from there. All right, so, and we did get a little bit of reverse bullish divergence here between price action. You can see the low here. There's a bit of an anomaly candle on earnings day there. All right, but you can see price action putting in higher lows. Here you can see stochastics putting in lower lows. All right, so that's AIS. So obviously, we're looking at 144.58 as support. And if I go back to a horizontal line here, you can see that swing high at 162.76 resistance, past swing high resistance. All right, so see if that one can continue to run and see if it can test that level of resistance there. Here's Hood. So Hood, you can see, has pulled back as well. You can see it found support right in around 98.68. All right, you can see that's been a significant level there. And you can see that it does have previous swing high resistance here at 117.70. All right, you can see it was pulling back up, down day on Friday, so you were seeing stochastics turn. Really like to see stochastics moving up, and in cases like this, break of the downtrend from the pullback. but you can see earnings behind them as well. Here's Oracle. So once again, pullback story here. And you can see that they have a nice level right around here, 216, 216, we'll call that 216.40. And you can see they were able to come in, put in a new high, have pulled back, retested, tried to bounce on Friday. You're looking at a doji. They're going to have previous swing high resistance in around 258.34. All right, you can see the earnings picture there on Oracle as well. And here's Gilead Science. So Gilead had been range bound for a while. You can see they were able to put in a new 52-week high and then came down challenging 113.98. Bit of a breakdown below it, but still within the zone. And you can see on Friday pushing back through the absolute line there. You can see their previous swing high resistance here at about 120, 121.36. All right, you can see the earnings picture there on Gilead as well. You can see RT coming back above 1, 2. All right, so that's the US side. Let's go to Canada next. All right, so we'll go to the viewers there and we'll go to this one so you can see stochastics here as well. We'll graph all of these and bring our graphs over. All right, so I do have the NPI on, but I won't change all the graph layout at this point. Just know that we're not looking at that NPI setup. This was the stochastic search here as well. All right, so grocers have done pretty good in Canada. Like Australia, we don't have a lot of them. You can see Metro has pulled back. You can see their earnings picture looks pretty nice here. So they have pulled back and are basically retesting. Let me take off the last close here. Retesting right around these old tops, right in that area, 95.56. And you can see they'll have previous swing high resistance at about 107.96. All right, so we'll have to see if 96.56 will hold and see if they can bounce from there. All right, so that's Metro. Here, so I didn't know if Jay was out there, but Jay likes to release the Kraken. Here's Kraken Robotics, symbols PNG, in the aerospace and defense sector in the Canadian market. And you can see that they've had a pretty good run up and then have pulled back right into support at 332 here. And you can see previous swing high resistance at 393. Here's premium brands. So you can see a bit of a rocky road for premium brands, but you can see stochastics back down, coming back above 20. And with premium brands, came back looking for support right in around 92.54. You can see they've had a run up. Definitely hasn't been a clean one. A lot of back and forth there, a lot of volatility in that area, but they've come back up, taken a run at their previous swing high right in through here, tested that zone, and have now retested support at 92.54. Bounced the last 3 days from there, see if they can take a run back at 96.92. Here's Galaxy Digital. So you can see they've also pulled back to a pretty good level here of support at 29.81. All right, and they're kind of range bound consolidating between that and 35.02 at this point. So you can see stochastics has turned. They did try to bounce here, retested 35.02, came right back to retest 29.81. So we'll have to see if they can bounce and take out this level before taking a run at previous swing high there. All right, so that's Canada. Let's jump over to the European Union next. So the European Union, we've already got our watch list here, so let's graph all of these. All right, let me get stochastics on because that is the search that we were using here. Whoops, I already had it. So we can remove one of those and go with that one. There you go. So you can see stochastics basically came down, starting to try to bounce. And here we're looking at, if I take off last close. So this one was able to put in a new 52-week high, pulling back, looking for support in around 1717. All right, so if the overall market can start moving in the right direction, see if this one finds support and can bounce from there. You can see previous swing high resistance in around 1849. Here's Synergy Holdings. Same kind of story here. You can see the stochastics picture. You can see the earnings picture. And this one was looking to find support in around 1020. Previous swing high resistance at 1130. All right. So once again, same story. If the overall market can go, you can see they came almost down to the absolute line on Friday, finished with a doji right around the middle of this range. So if they can bounce from there, see if they could continue an uptrend. Here's Siemens Energy, so ENR.DE, and you can see move up here. They too came down, looking to find support at 83.14. Tried to bounce for a couple sessions, bit of a down day on Friday. Previous swing high resistance at 103.98. All right, lastly, we will look at Australia. So Australia, just looking at stochastics, really only one kind of jumped out. So let me bring the graph up on that. All right, so this one, JBH.AX, so JB Hi-Fi Consumer Discretionary. You can see the earnings picture continuing to improve. You can see stochastics starting to change directions there. And if we look at this one, take off our last close, here you can see they were able to come in, put in a new high right around here, pulled back, looked to find support in around 112.76 and previous swing high resistance at 121 level there. All right. So looks like I'm going to jump back into the slides here. I did have another couple for Australia, just so you know. I won't go over the graphs, but I did look at breaking resistance in the ProTrader Unisearch as well. Came up with CYL.AX and then the Midas Touch VST divided by RT ALI.AX. All right, but I'm going to jump back over to the slides and I'm going to turn everything over now to Susan for her keynote presentation, Navigating Earnings Season with VectorVest. All right, so take it away. Welcome, Susan, first of all, and take it away.
Thank you very much indeed for that, Rick. As ever, you cover literally the full world when you do that. So thanks so much indeed for setting us up here today. So hello, everybody. My name is Susan Hayes Culleton. It is great to be back here with you. I am here roundabout now once a quarter to talk to you about navigating earnings season with VectorVest. So I am going to start off by asking everybody to just let me know there in the chat, have you been watching earnings? Who have you particularly been watching? Is it something that you take a look at, or is it something that you're here to learn a bit more about. So I'm just interested in your thoughts and perspectives, and I'm naturally enough pulling up what you're going to say here in front of me right now. So please do just pop it in there into the chat and just let me know what your take is on earnings at the moment. So are you watching them? Any particular stocks jumping out at you, etc. Now, of course, if you're on the mobile, you may need to just change your screen so that you can see the chat. And I'm just going to give you a moment there to get that up and running on your side. And then I'm going to go through exactly what it is that you've been saying in here. Now, and of course, the other thing that I need to make sure that I do is not to be playing myself at the same time. Okay, so any particular stocks? We've had a range of them this week. We've had Dell, which I'm going to talk through. We have had CrowdStrike as well, another interesting one. So just going to see now what it is that you are saying. And I'm pulling this up here now right in front of me. Now, of course, if you never look at these, that's completely fine as well. That's completely fine. That's what I'm here to do, is to show you how to do that and see what it is that you are looking at. So just going to, as I say, give you a moment to get those thoughts in there. Okay. No, Joey, no, I'm just happy to read through them here for the moment. Okay, so what I'm saying here is so Virginia says, I always watch earnings. If they're not rising, I do not buy. Okay, that's a very good point, Virginia. And of course, you can see that in a second on a VectorVest graph. Erwin says, thanks for covering the markets for us, Rick. Great to see you, Susan. I've been watching gold and silver mining earnings, interesting, which are on a rocket ship recently. Okay. Brian says, yes, watching earnings mostly on tech companies and Canadian banks and gold stocks. I'm certainly going to talk about the tech companies today, Brian. I couldn't not. Okay, Richard says, keeping an eye on all my holdings earnings, a few that I've been watching: Cost, CLS, IBM, PGR, ISRG, APP, AGX, to tag a few. Okay. Marty says, never invest without watching earnings and some consistency, and you also attend some earnings calls. Okay. Ronald says, you sold AVGO before earnings, mistake. Okay. Very interesting. Very, very interesting there to see what you're all saying. So what I'm going to do now is I'm going to share my screen, and I'm going to particularly bring you through some reports that have been out there about earnings at the moment. And what I'm going to do then is I'm going to compare and contrast against what VectorVest is saying. I'm going to compare and contrast against using different functionality in the system as well, so that you can look at this. And of course, I'm naturally enough going to talk through a range of the different themes that have come up in earnings, but how we can look around the program then to get some insight on what to do with that. So, Joey, now I am indeed going to share my screen, and I'm going to put up this screen right here. Just going to make sure I've got the right one there now, because I've just made that mistake of where I was showing you the wrong screen. Okay, I'm going to go again. So the reason I did that is I'm on one screen and YouTube playing me is on the other screen. So therefore, as a result, I got confused there around which is which. Okay, so now we are up and running here. This is the report that I want to bring you through first. Okay, so this is from, okay, Q2 2025 earnings recap. Thank you, Joy, for letting me know about that. Okay, so there is an 8-page report here. I'm going to bring you through the highlights. I read through it all. It does go into quite a bit of detail, and I'm going to show you a couple of others that have done the same. But what I particularly want to do is I want to show you the key highlights in here. So this is the first one. Now, as of the 8th of August, just over 84% of the S&P 500 had reported earnings. Now, at this point, we're up to around about 98%. As Rick said at the very beginning, we're almost at the end of Q2 earnings season. So this report is broadly accurate, but I do just want to highlight the fact that when I show you different reporting styles, you do just need to bear in mind that some of them are a little bit later than others. But this is the big one, right? At the sales level, 69% of reporting companies beat estimates, with year-on-year revenue growth coming in at around 6.3%. versus 4% expected at the start of earnings season. And this marks a significant improvement from the level of surprise seen last quarter. So often, when we talk about earnings, we often talk about earnings themselves, okay? We often talk about, and earnings is another term for profit or another term for margin. So often we talk about an earnings surprise. But one of the defining characteristics of this season's earnings is the sales outperformance. Now, here's what you need to do then as an investor, or perhaps if you're looking at this from an analyst point of view, is if the sales are rising, the real question is, are they translating more of that money into the bottom line? In other words, what is the margin expansion? And margin expansion is this. Let's say that I am running a company and I'm generating $100 in sales. Now, out of that, I am now generating $20 out of that as profit. So then that would tell you that I have a margin of 20%. Margin expansion is if through cutting costs, increasing efficiency, increasing prices, whatever, I am now generating $21 or $22 out of that 100. And as a result of doing that, then of course I have more resilience in my profit and loss. I have more resilience in the business to handle things like inflation or CapEx. That's another term we're going to talk about today. CapEx is capital expenditure. Or I have got more freedom now to implement more aggressive marketing perspectives, etc. So while Q2 has been a very positive month in terms of sales, the real question is, how does that translate into profit? And whether that is also able to do so in an environment of profit expansion, or sorry, margin expansion. But of course, we also have to mention the fact that there has been a lot of buying, and therefore any company that buys, you need a company or some sort of entity that can sell to them in advance of tariffs being implemented. There's a lot of reciprocal tariffs that have only started at the beginning of August. So a lot of Q2 was factoring in companies aggressively going out and buying, increasing inventories and so on. So then, like particularly if you were to look at the Irish export figures for the year to date so far, they're phenomenal because a lot of the pharma companies have been stockpiling inventory, shipping a lot of goods to the US and so on like that. So I just want to start off with that at the sales level, we see like really significant growth, really significant upside. And this has to be taken into consideration in those two ways. One is, how does that translate to the bottom line? And two, is this a bit of a spike because of an anticipation of what's coming? Now, moving on then to earnings. So 81% of companies beat estimates, with earnings per share growth coming in at around 10.5% versus 2.8% that was expected. So a much better result than was expected. Now, you could say, okay, Susan, does this not answer the first question that you posed? And I would say to you, partly, it does show that companies are becoming more efficient. If you are on earnings calls like I am, you will constantly hear how companies are looking to take cost out of the business. We've certainly seen some companies reduce their headcount quite significantly. But again, and there's always an again with me, there's two things that I want to point out here. Number one, how much of this dramatic increase in earnings is down to those once-off measures that I mentioned, like the stockpiling of inventory and so on like that. So how this would be maintained consistently is what one really needs to ask. But the second question is, of course, AI. Now, I'm going to talk about AI as a theme today. I have to do that because it is such a big theme in 2025. It's where there's an enormous amount of CapEx. There's that word again, capital expenditure. The companies that are investing in AI and delivering AI, particularly in the Magnificent Seven, have had a roaring success of a year, particularly since the 8th of April, since the market low on that point. But we have to ask a broader question. And that is, there is eye-wateringly enormous sums of money being invested in AI. Is the return on those dollars coming through? Because I can sit here in front of you today and I can say, well, I'm using ChatGPT to help me with writing something or preparing a presentation or research, and ChatGPT has really developed enormously since that, right? That's fine. But if I'm doing that, I pay $20, $25 a month of a premium subscription to ChatGPT. Like, that's not what we're talking about. We're talking about companies that are pouring billions and billions, and a lot of them are the Mag 7, into large language models, into creating an AI offering for their clients to be able to turn their AI investment into money, not into like what I'm doing, which is increasing my productivity through using AI in my day-to-day work. I'm not selling anything that could be AI driven. And therefore, you need to think about that too when it comes to that question around AI productivity. Yes, for you and I who might be using AI in our daily lives in different ways to increase our productivity, that's one thing. That is not what the market is questioning. The market is questioning those who are pouring billions and hundreds of billions, and of course, the world's energy and water and data centers and all that into it as well. So when we talk about earnings here, we're seeing a significant increase. They're the types of things that we need to consider. Now, down here then, to get on to the thematic elements here, sectoral level, we've seen the healthiest earnings growth in communication services, okay? Technology, again, no surprise there. Healthcare. Healthcare and finance are the two sectors I want to talk about particularly today. Healthcare is the only non-tech sector that was able to deliver double-digit increases. That is the only non-tech sector. And then financial services, that was the one that has delivered a very significant surprise. You know, earlier on there, Rick was talking about interest rates, the jobs report that came out this week that was very disappointing in the US. The grand scheme of things, when you look at the labor statistics, the labor growth in the US, when you actually look at how the numbers that were coming out, you know, the 70,000s, 80,000 numbers, all of those have been revised way down. The jobs growth in the US is really quite small at this point, particularly when you look at the entire summer, not just one particular month. And as we know, the Fed is very data driven. It's got two mandates. One is price stability, one is full employment. So the market is really beginning to factor in an interest rate cut, particularly after the comments from Jackson Hole, when we see how the Fed board is changing around as well. And that's without necessarily getting into the politics or the independence of the Fed or so on like that. When you actually look at the data that the Fed is analysing in order to make these decisions, the likelihood is now you're heading towards more of an interest rate cut. Now, interest rate sensitive sectors then, like real estate or like finance, like financials, aren't necessarily going to like that. But the higher rates for longer in the US than probably anticipated at the beginning of the year certainly have helped there as well. Now, I want to bring you down though. I want to bring you down here to operating margin. Okay, like I said here, big element of the report is increase in sales. That's a big thing to take out of this. But yes, here we are. This one, right? This is the one to watch in the weeks, months, quarters, and years ahead. Is operating margin was flat for the second quarter, but predicted to rise, right? So that is currently what is anticipated to happen in the next while. Now, should this be able to entrench, right? We are expecting that this would be driven, number one, by pushing inflation continuously down. As we know, the really significant inflation years of 22, 23, driven by a wide range of things that I'm very happy to remind you about, but I'm sure you all know them. A lot of that has passed, particularly in the US. In Europe, to a lesser extent, we've still got a war going on in the continent. Food inflation, particularly food inflation, is very, very high here in Europe. And also, there's a range of other things going on in Europe that I need to tell you about. But if you've got higher margin, you've got higher resilience. And margin can be driven by cost cutting. So like I say, when we see energy inflation having fallen off, for example, we've also seen companies got more efficient. You can have bulk buying, discount buying, you can have pushing up prices. They're all things that can lead to a higher operating margin. But then I'm back to this point again, but now in a broader perspective, which is the impact of AI and productivity. So when I look at my daily life now, and I'm looking at the jobs that I'm doing, and I'm looking at the speed at which I'm doing them, and I'm looking at the tasks that I'm delegating to the team around me. As I look at that, AI has changed things. And I'm very grateful to tell you here at VectorVest Europe, I've got a really wonderful team, no doubt about that. And I will say of them all, of which I've had to lead from the front, that unless we're able to adapt to these technologies, and it is a fundamental shift in how we work, then there could be scope to let people go. But here at VectorVest Europe, certainly that's not happening here, because instead we are not just looking at how we do things better and more efficiently, but now with the extra time we've gotten back, how do we use that to great extent? And that, I think, is a 2025 thinking. I think when ChatGPT came out first, we thought, look at this, it can write an email for me. How exciting. And there was a lot of novelty. But I think what I really need to think about as a business leader within the organization here is to think, how do I turn the time that AI is giving us back into a better outcome for the business, for the subscriber, for the technology? And so, as you can imagine, I'm not alone in that type of thinking. And if you can do that well, therefore there is scope for margin expansion. But they are the things that one does need to think about. And I will say there's one other thing that you need to know about in Europe. We have what's called the EU AI Act. The only regulation in the world around AI is really here in Europe. Does that surprise any of you? I doubt it, because that is one of the things that Europe does very well. So as that's happening now, you know, GDPR is, we're the home of it as well, of managing regulation around data. So when you look at things like that, this is where the US is doing things very differently to how we are. But when it comes to how Europe is doing things, I think Europe is taking margin expansion on board at a different level. But just our investment in AI does have other things to factor in. And of course, then we can also lever on the results that the CapEx in the US is delivering. Okay, now, moving on, I also want to talk about then, of course, how the market has reacted to, and we go back to share my screen there, Joey, please, how the market has reacted to misses, right? Because I want to talk to you about Dell. I want to talk to you about Dell today. I have the transcript there of the earnings call. And, you know, I seem to find myself so often here with you on this forum where I talk about a company who's had really brilliant earnings and very meh type of stock market reaction. And from time to time, I talk about the Mag 7 from time to time. But like last time, I talked about Broadcom instead of NVIDIA. Because NVIDIA, the share price obviously is very, very frothy, and there's so much commentary about NVIDIA. I wanted to add something to the table, right? So Broadcom had really, again, fantastic delivery. The market went meh. Dell, the same. Dell's earnings, sorry, its sales were up 19%. Like, its sales of a behemoth like Dell, market didn't like it. Market dropped after that on Thursday, picked up again on Friday. But the point that I want to make here is that the market has now gotten accustomed to, I think the stock market has kind of said, look, you know, tariffs and all that sort of thing. Yeah. Look, that probably won't be a big deal really for us anyway. Now, in some ways there's merit to that. And I want to show you in another report where that comes from, because when you actually look at the industrial companies, the companies selling goods, they're a relatively small part of the S&P 500 in comparison to the services, right? Which wouldn't be affected by tariffs on goods. So partly there's merit to that. But where there's also another point of view here is that the market has kind of said, look, there's been all sorts of, you know, Armageddon scenarios put out there, and they're not coming to pass. So you know what? We're going to expect that stocks do well. And when I say stocks do well, the company's earnings do well. And as we've seen this time in earnings, they have. So therefore, they've been rewarded. However, what is interesting is down here is that if they miss their earnings, they're certainly being punished by the stock market. But if they miss their sales and their earnings, now you can see a very, very significant, severe punishment for that. So that's also another element that I wanted to bring up as well. Now, what I want to do though, is I want to talk to you about the Mag 7, right? Because it's important that I do. So what I've done here is I've gone into the program. I wanted to get a start on this so that you didn't see me starting this off. But just in case you don't know how to do this, I think it's important that I show you how to do so from the beginning. So I'm just pulling up something else here on my screen over here on the other side. Okay, so what I've done is I've gone in here into Viewer, and then I went to Watch List Viewer, and then I went into S&P Watch Lists. That's where you can put it anywhere, but I put it here. And then I've created a watch list, right? So I just created a new one here. Okay, so there, a new watch list. And I have a watch list here now called the Magnificent Seven. So as you can see, I've added Google, Apple, and Microsoft in there, right? Now, I'm now going to add in NVIDIA. Well, I'm starting to there, NVIDIA, right? So this is how you add a stock into a watch list. So here's NVIDIA. Okay, so I'm just going to click on NVIDIA and I want to add that in there. Now, there's 7, of course. And so the next one I want to add in here is Amazon. I'm going to put in here Amazon. The next one I'm going to add in here is Meta, and then Meta, and then I'm also going to add in Tesla. So as you can see here, I can populate several of them. So back to that person who was commenting with your ticker codes when I was asking what earnings that you're looking at, that's the way to do it. Okay, so there's Tesla, and I'm just going to add both of those, right? So here you go. Now, in a couple of seconds there, what I've been able to do is I've been able to generate a watch list with the Magnificent Seven, right? There you go. 1, 2, 3, 4, 5, 6, 7. Now, here's what I want to do, right? I want to question something here with you. I want to question if the Mag 7 and the index have caught up with each other. And here's a way in which I can call out very quickly the growth gap. Because let me go back to the market low. I mentioned it earlier on today. I'm going to, now the date has appeared on my other screen. I'm just going to move it over here for you. And I'm going to go back here to April. And I want to go to the 8th of April, right? Market low. Okay. So let's just run the list there now. Now, as you can see, it's automatically generated there by VST, right? Now, there were all sells at the time, right? All sells. Look at that. Tesla went down 11% on that day, right? Oh, absolutely harrowing. Now, if you had bought that day, and by the way, a lot of you wouldn't, neither would I, not with a sell recommendation on every single one of them, right? But let me just quick test this list since then. And as you can imagine, what I'm going to find is that the performance of the Mag 7 in comparison to the S&P 500 is going to be strikingly different. Okay, so here we go. 7 winners. Look at that. Nvidia is up 73%. Google 60%. Right. So in comparison to the S&P 500, this is what I mean by the growth gap. Another absolutely defining characteristic of earnings season in 2025. So we can see here, right, the worst performing of them was Amazon at 36%, right? So they would say, oh my God, Susan, absolutely, the Mag 7 have run away. Grand. Okay, now let me go back to the beginning of the year though. Let me go back to the beginning of the year. And again, I need to pull over my date here on my other screen. Okay, and I'm going to go back over here now. Let me go to January, okay? And I'm going to go start the year. Here we go, 2nd of January. And let's now compare the two. And this, by the way, you can do with anything, right? Because I'm going to show you some AI stocks that are doing well, you know, they've gotten a lot of attention. And you can do this, you can create a watch list like this in any way. Because remember, an ETF has stocks that might be in the proportion of market cap, whereas you and I might have all of these 7, but we can put like $10,000 into each one of them. We might equally weight them. So the return of an ETF might not it might not replicate what you would do as an investor if you were buying them individually. Now, let me quick test all these. Let's see what we've got. Now, you see, much closer. This is the point. This is the point, is that yet again, we are hearing, yeah, Mag 7 are doing great, and they are. But who was buying them on the 8th of April? Who was buying them? Now, yes, of course, the S&P 500 had them. Of course it did, because of their market cap. But did you? And so therefore, when we look at your returns or my returns for 2025, just, you know, just think about what is your reporting period, because of course it would have been wonderful if you had a crystal ball at that point, gone in, filled your boots with Nvidia. Was that happening though? We can see Tesla's down in the year. Apple flat. I sold my Apple shares before that. And I did have them, and I did well. I did well in them. Then I was delighted that I sold them before the 8th of, or before Liberation Day and all that happened then. Then I was looking at them since, God, should I have held on to them? The reality is I did well. I did well by actually not having them. So Nvidia is actually up 20% this year. So if you bought in January and closed down your account and really not come back here until today, like, it's up 20%. 70%, yes, since the depths of the market low, but it is another 2025 story. Okay. Now, of course, while I'm here, as in me personally, while I'm here, I want to talk to you down here about Europe. Okay. Right. So, right, here's what's going on in Europe. We are doing okay. Okay, markets are doing okay. So I've had some really good stocks that in here in Europe that have been doing well. My Hyman's shares, I was telling you about those last time I bought those. It was top VST stock that suited me. Anybody that has been here on this on the show before will know I'm quite a self-aware investor. I know what I like. I like good dividend. Personally, I like options as well. I like to sell options. Sometimes puts on the way in, sometimes calls when I'm selling. I'm somebody that likes consistently growing earnings. I'm somebody that likes stocks that have a very reasonable PE ratio rather than the eye-watering numbers that I'm seeing in some places. So I know who I am, right? I know who I am. And Hyman suited me. And as a result, I have, the European stock market this year has been okay. It's been okay for me, but I've gotten some pretty good stocks driven by high VST, driven by VectorVest handing me on a plate what it is that I was looking for. But if you just look over here, right, you can see, again, like in comparison, approximately 38% of companies have beaten on sales. We see about versus 43% of the quarter. Sales growth, a little bit negative. 51% of companies reporting 51% of reporting companies beat, with 30% missing their estimates. But you know what everyone was talking about in February, March, including me, is this the end of US exceptionalism? 2025 so far is saying no. No, it's not. Is when you look here at earnings of the S&P 500 in comparison to the Stocks Europe 600, the earnings are ahead. And if you go down here another little bit, also the US equity valuation premium is there as well. Now, where will this go? Well, that is, of course, what is very, very interesting to watch. And of course, I want to elaborate more on tariffs and all sorts of things. But before I do that, I just want to tell you something else that's going on in Europe that I think might be interesting. I'm going to stop sharing. Joey, can you change across, please, just to where I'm just at the camera, if you would, please. And I'm just going to, okay, thank you very much. Now, France. I have to tell you about France because I was there last week. And another development that's happening in VectorVest Europe is we've now started having our first French-speaking webinars and workshops. I was in Namur, the French-speaking part of Belgium, this week it was on Tuesday evening. We welcomed lots of new people to the community, and a shout out to anybody who's joining me from there today. But on the way, I decided to go to France first. And I'm somebody that, je parle un peu de français, which means I speak a little bit of French. And I decided that I would go to France first myself. And I went to Nantes. I got a train then from there to Paris as I was going to Belgium. And then I met with the team in Belgium right throughout the week this week. So it's important that I talk to you about France at the moment, because what's not noteworthy is the fact that I was there. But what is noteworthy is what's happening on Monday. Because the fourth prime minister in 2 years under President Emmanuel Macron has put forward a budget cut of 44 billion euro, including 2 public holidays to be eliminated. Now, last year, Macron called a snap election after the European elections, and that actually ended up being in a much more disparate parliament. So as a result, that vote is now going to happen. Instead of it being voted through the parliament, the Prime Minister, Francois Bayrou, has called a referendum of confidence, sorry, not a referendum, a vote of confidence in the bill. And it's widely expected that that will not go through. And as a result, the borrowing rate, the cost of borrowing, now Rick has already referred a little bit to this, but the French bond yield has touched off 3.6%. It's now up at a Greek level. And I know Rick was talking about the Greek ETF. Like when I talk about the Greek bond, though, you are talking to an Irish woman here, right? I remember 15 years ago when we had to call in the IMF because Ireland couldn't borrow on the international markets at a sustainable rate. So the big question in Europe now is France heading in that direction? Debt is currently at 116% of GDP. A quarter of the federal budget is now being plugged into maintaining the pension system, and the parliament can't agree on how to do this. And I could get on and talk about the politics of what's going on there, but what I do want to particularly mention is the question now here is, where does this leave the European system? And if there was needed to be the IMF, if it was needed to be bailed out, all that sort of thing, that kind of conversation is happening. But in everything that Rick spoke to you about when it comes to the EU, everything he talked about, all eyes are looking at France on Monday. Not because we're not sure what will happen. Unfortunately, we're pretty clear on what might happen, but it's the consequence of that. And again, I could pull up, actually I'll do it now. If I can, I'll just go back to sharing there, Joey, please. I'm just going to briefly show you how the stock market has reacted in France to this sort of a development. So I'm just going to pull up here. This is Heyman's. This is the stock here I was telling you about. The one that I bought. I think I just bought it earlier on this year. Anyway, it's doing very well for me. It's behaving itself well. But let me just show you over here. I want to go back to my watch list viewer. You all have access to this, by the way. All of you have access to this. And if I come down here I'm going to come down here to index watch list, and then I'm going to go to the CAC 40. Okay, so this is the index in France, and now you'll just see, is that like France isn't kind of happy? Not really happy at all. So if I just go back now to the beginning of the year, And again, of course, I have to pop over here because of my date. So this is the one to watch. Watch out for this now tomorrow. I'm sorry, today is Saturday. This is live. Watch out for this on Monday, 8th of September. And just keep an eye on what is going on in France, okay? And particularly watch what happens to the euro. Watch what happens to the European markets. Watch what happens to sovereign bond yield. Now, also, Rick there, he pointed out about something similar going on in the UK. Now, there's all sorts of issues going on there as well, but I'm not going to bring that up with you at the moment. Sorry, I just need to change the date here, because it's a pretty similar story. And if I was to get into the ripple effect and so on like that in the UK stock market, it would also take me a significant amount of time. But of course, as you know, we don't have a VectorVest UK product anymore, so therefore it might be of limited benefit to you when it comes to the program. Now, I'm having trouble there just getting my date. Oh, yeah, there we go. Okay, now I'm just going to quick test all. Right, here's the CAC 40, right throughout the year, as you can see here. There's, it's quite significant. There you can see that it's performed at 7.118%. Now compare that to the S&P 500 returns that I was showing you there earlier on today. And by the way, if I was to go back to just a month ago and to talk about that, that would be another ball game again. Now, it's important that I just want to, because I know time is moving on. It's important that I go back to AI for a moment, right? Because I want to show you this. This is from BlackRock. So BlackRock, of course, largest ETF provider in the world. And I just want to show you a couple of things here, right? So the earnings report that it's giving is pretty similar to what I've told you, right? About sales, Mag 7, etc. But what I do want to show you is that if you do want to invest in the AI theme, be careful, right? Be careful, because you're dealing with very, very frothy levels of PE, and PE being price earnings ratio. And like when I think about CrowdStrike, right? CrowdStrike had their earnings out this week. Like, look at this, right? Just take a look at this. CrowdStrike. I'm just going to go over here now to my viewer home, and actually, let me go to a graph. It's probably better if I go there. Now, CrowdStrike like cybersecurity, right? That's what it is. It is CrowdStrike. Yeah, there we go. Now, just take a look at the PE ratio on this. And because you could really say, well, with the growth of the amount of data that's now online, cybersecurity is certainly an area that, one might feel more and more is more of a theme. And the thing is, not alone is there plenty of merit in that. The question is if everybody else, the question is that everybody else is thinking that too. And therefore, here we go, CRWD here, there we are. Now, right, so you can see here, the price has fallen quite a lot since July, since the highs of July. But look at the PE ratio. Let me just show you the PE ratio over here. PE is 105 times, right? 105 times. The earnings of this company is around about 396. The stock price is 100 times that. Like, that is absolutely striking to someone like me. So now, you may say, yeah, but Susan, look at the growth. And if I go back further, I could extend this graph. I mean, it's been a really successful company, dipping earnings now. Okay, of course you could argue back with me. Of course you could. And that's what the stock market is full of. But what I am saying is, when it comes to the AI theme, just be careful, right? Just be careful. Just make sure you analyze it. Look at the RV, the RS, the RT. If you don't know any of what I'm talking about, make sure and join some other VectorVest webinars and we'll explain exactly what all of those are. But I just think that these ETFs offer some ideas to you, perhaps, that you might want to consider. Like this ETF here, it's up, the last time I checked, about 17%. Yeah, 17% year to date, right? The net expense ratio of this is 0.55%. So for every $100 you invest, 55 cents of that goes to the ETF manager. Right. Now you might say, okay, well, that still could be worthwhile. Okay, fair enough. But just come on away down here. Because of this, because it is a portfolio that is in an ETF, we can see what it is. So maybe it is instead that you might want to say, okay, well, okay, nearly 10% of this is NVIDIA. You've got Broadcom, which I analyzed the last time I was here. You've Meta, you've Snowflake, you've Oracle, you've SoftBank, you've Cloudflare. So this, if you want some ideas around an AI theme, and of course, VectorVest is well able to give you those if it's like a fundamental point or anything else like that. But if you want another idea, you can always look at the holdings of an ETF, and then you can go from there, perform your analysis, just like I've been doing there a little bit, and you can go from there. Okay, now I am running extremely tight on time here, and I want to talk to you about so many things, but there's two things in particular I do want to bring to you. I want to go to Dell, right? Dell's earnings call was out on Thursday, and there's a couple of things that I want to pick up on here. Before I do, let's take a look at the graph in comparison to something like CrowdStrike, right? That also obviously had its earnings this week. Okay, right, here we are. Dell Technologies. Now, I have been a customer of Dell over the years. I'm sure several of you have been too at some stage. Just want to make sure now that I get the graph up here for you. And I want to particularly highlight, yeah, here we are. I just need to click it one more time. Now, look at the difference in the P ratio. The P ratio of Dell is 12.5. Now, CrowdStrike was 100. And I, of course, look, I'll bring up NVIDIA. And I'm certainly not saying, don't buy NVIDIA or anything else. I'm just saying, analyze them. Just analyze them. Don't just go with, oh, everything's gone up, it's great. Like, this is what VectorVest is for. Help you to analyze what suits you. Now, Dell is at 12.5. Look at the reaction here to the earnings. Look at that gap down. And then after that, then the market yesterday said, well, hang on a second here. Like when I was studying this, and I'm a CFA, I'm a chartered financial analyst, charter holder, right? Oh my God, we spend so much time discussing and analyzing the efficient market hypothesis, which hypothesizes that that as soon as information is out, the market just takes it into consideration and bang, it's implemented into the price. Therefore, there is no possible way for an investor to be able to get an advantage. Now, there's lots of things that can disprove that, and there's loads of things like that. But what I am just saying here is it's interesting what happens when the market has a little bit of time to think. Because that is what you can see here, is that the stock price started off, here we've got 120, and then it's been up now to 124. So now, of course, if I was to zone in on that, you would see the the bars as they went through each of the days, and you can see what happened there. But there's a couple of things I want to draw your attention to, right? First of all is the AI theme here. This AI, okay, just let me go. Oh, okay, no. Look at this, right? Jeffrey Clark here says we had record operational execution in the second quarter with record AI shipments. The revenue was up 19%, like I told you. And then, so these are two parts of the business. Like, for example, this is Client Solutions Group was up 22%, earnings per share was up 19%. What does that tell you, right? That tells you that the margin that they're generating is consistent, is that as sales are growing, they're able to bring that down to the bottom line. But in particular, they're seeing strong demand for AI servers. They booked 5.6 billion in orders, and they've shipped more AI servers in the first half of this year than all of the last. So Dell is a potential AI play as well, but the markets are just shrugging it off. Because with a PE ratio of 12.5, and naturally enough, you look around the rest of the business, and then of course you have to question where it's going. But just as an AI theme, it's an interesting one. And I want to show you something else they said about TAM. TAM is total addressable market. Yes, this is the part I want to show you. So AI hardware and services TAM, total addressable market, is expected to double from 184 billion last year to 356 billion in 2028. So there's a remarkable scope here for them to expand and expand and expand. But also, two quick things more I want to show you, which is full year guidance. They're now increasing their full year guidance. They now expect full year 26 revenue to be between 105 million and 109, which is up 12%. So they have delivered an increase of 19% of the quarter. They're expecting full year guidance to grow. So this is an example of a company where they've got a lot of, now it's AI servers, right? And again, that's why I spent so much time at the beginning of today talking about how it's different to consider the companies who are making AI productivity innovation in their own company, changing their work and so on like that. But companies that are selling AI, we have to question whether they're actually selling it at a profit, the amount of capex that's invested, etc. Speaking of capex, here we go again. Capital. Yeah, there we go. So we go back here. No, yeah. So they say the 15 billion, and no, that's just in terms of their sales. That number there, that's not quite what I wanted to show you. Yeah. So the strong performance resulted in another quarter of robust cash generation and significant capital returns to shareholders. But how much they're investing in their infrastructure is in there is quite significant. But the last thing I just want to show you is what the first question was in the Q&A. First question was, oh no, that's Yvonne. No, she was talking about the finances here. Look at this question, right? he says, hitting Aaron Christopher Rakers from Wells Fargo says, you've raised the full year target of 20 billion plus, up from 15 billion. Like that's billion with the B, right? And I know Dell has been around like forever and all that sort of thing, but still, it is really, 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 really significant there, right? So it says here, you've got, let me see, I'm just curious, given that you did 8.2 billion this quarter, I guess implying call it 5 billion to 6 billion plus or minus throughout the next couple of quarters, what is your ability to flex upward and the capacity to see continued upside to even that 20 billion? And I just think that's interesting is that the fact that analysts are questioning, right, but have you got the scale to be able to deliver upon this? And that's the question that Dell has to answer. Now, of course, he goes on, he says he does a course, right? And so would I. But that is what we need to go on and actually make sure the companies are clear about, is that are they able to deliver upon these opportunities that the company has? Dell as a stock, as you can see over here, you've got earnings per share there of 9.99. CI is not brilliant. The comfort index is not brilliant. The stop loss is at 121. Obviously, given the fall that happened there last week, there was a chance that it could have headed into sell recommendation territory. Dividend yield of 1.68%, earnings yield of 8%. So, of course, one does need to make sure that, and I'm just going to give you the RV, the RS, and the RT as well, is that should you be looking for an alternative, like a less expensive AI play, it is important that you've got one that you're not just buying because it's cheap, but that actually meets the other requirements that you need. Relative value here is at 1.4, relative timing is at 1.15, and VST here is at 1.17. Now, very last point, although I could have talked to you about so much more today, right? But very last point I want to talk about is tariffs, right? I'm going to give you three companies, and then I'm going to give you one statistic. Look, I have spoken twice on this. Sorry now, Rick, I know I'm going over time, but I just want to really make sure that I don't abandon everyone without discussing the theme of the quarter. Now, I have on several occasions spoken about Lululemon on this program, right? And I just want to pull up Lululemon. Lululemon has said in its last earnings call in this season that it's taking 240, yes, Lulu, a 240 million hit to its earnings, right? Now, look at how the stock market reacted to that. Just again. Here we are. Look at that. Look at that. Lululemon's high, $421. That was on the 30th of January. We're now down to 161. It has lost more than half of its earnings potential, or sorry, half of its share price, which is striking, really, really striking. I was going to talk to you about Walmart, because that was the first of the big box retailers that was out, but I actually want to bring you over to Europe instead. And what I want to do is I want to show you two companies that again are, you know, in anticipation of what's going to happen with tariffs. One of them is like serious, where are we now? Hermes EC in Paris. Okay, so this is, in here into the viewer. You're just going to see here a stock again that is just seeing the impact of it. Sorry, maybe I should go to the graph instead. It's easier to show you that. So if I just go over here now to Hermes, like Hermes has been a beautiful stock for the year. In fact, Hermes to a large degree has been a great stock since I started VectorVest. It really has. Now, eye-watering share price up in the thousands, but there you can see as well, 17th February, it was up there 2,800. It's lost 800 euros off its share price. And this is now where the market is saying, oh, God, this is going to hurt in terms of tariffs. And look at the premium that has fallen off it as well. Now, I'll stick with the luxury since I'm at it, right? Let me just take a look at Ferrari, right? Ferrari, company in Milan. I'm sure many of you know it. Maybe because you're VectorVest subscribers, you have one. But let me just go here similarly again, right? You can see here that there is a really big worry around this, certainly in goods companies. Now, last thing I want to do is give you the statistic and I'll finish then. And it was in this. Look at this, right? BlackRock, where I showed you, the company there, that largest ETF provider in the world. I'm trying to expand my screen and I'm doing nothing, only confusing you. But 82% of companies in the S&P 500 have beaten EPS earnings relative to a post-pandemic average of 78%, right? So what goes on, it talks about that. But then, oh, I wanted another piece. Yes, yeah. Here we are. Industries directly in the crosshairs of tariffs account for less than 17% of the S&P 500 earnings. And that's what Deutsche Bank estimates. And even so, the Q2 reports show that many affected organizations managed to protect their margins by adopting several mitigation strategies, ranging from cutting costs and building up inventories to raising prices and finding alternative suppliers. Before we started off today, Rick asked me in the green room, he said, Susan, tariffs, like, how is the world dealing with them? There you go, cutting costs, building up inventories, and that's what we have to watch out for. Now, when we move into Q3 and so on from there, raising prices, finding alternative suppliers. I presumed that was what they were for in the first place. The breadth of responses limited the contagious impact of higher prices and layoffs across domestic supply chains and in turn, the wider economy. The pain is set to worsen in the coming months. The bulk of Trump's reciprocal import duties were only implemented last week, and some businesses may hope that establishing a baseline tariff, the uncertainty of ongoing bilateral negotiations is at least reduced. So, Joey, if we just put me back on there onto the camera just for a moment before I go. And I just want to finish off with a summary of what I've said, which is earnings in Q2 was fantastic. Overall, we've had most of the time being beaten, but the big story was on revenue side. My question is, how much can that be maintained consistently? And also, how much of that is going to flow to the bottom line? And that's where we need to watch it from a margin point of view. Financial sector, surprised because you've got higher interest rates. That's the one to watch now. Now, lower interest rates, of course, is helpful for a lot of companies, and I know that too, but it's just important that you're aware of that. The Mag 7, if we were to look at it from the 8th of April low, has absolutely rocketed ahead. On a year-to-date basis, it's more muted. What's going on in Europe, keep an eye on what's going on in France. There's still pockets of value. And also, I think Europe is going to regulate in terms of AI and lever what's going on in the US. Big question are companies generating returns on enormous hundreds of billions of dollars that are invested in AI? That's a big question. And then, of course, the last thing is that if you are looking for ideas, yes, you can find ETFs that BlackRock are coming up with or other ideas like that, but just make sure and put them through the VectorVest system to see if they suit you. The one thing that you can really do all the time is learn more about yourself as an investor, and then become so much easier to use the system and to invest yourself and make decisions, emotional and otherwise. Rick, back to you.
Thanks, Susan. Once again, great to have you here and such a great presentation. So much good information there, folks. I'm gonna have to share out my screen here again. Lots of questions, and let me go here. All right, so I should be sharing again there. Yeah, so much appreciated once again, Susan. So there was a question before I hit that from Erwin on the global market tracking ETFs. So
Okay.
I did want to show, and this one wasn't for you, Susan. So, but I did want to make sure I show this before we leave. And I think Stuart kind of hit on it. So Erwin was asking, does VectorVest have a specific search or strategy investing in top trending country ETFs? And as I mentioned, Stuart kind of hit on it. I've got the US software up here, and just keep in mind, folks, so the global market ETFs and the sector ETFs are both watch lists under viewers. And cherry picking. If I go to cherry picking here, you'll find the global markets ETFs watch list, as well as the sector ETFs watch list. So whether VectorVest has an overall strategy or not, I just want to make sure folks remember that you can take any watch list, whether it's a VectorVest watch list or one you create yourself, and you can do watch list filters. So you can see that I already have set up for both the global markets ETFs. I'll just expand this a little bit so you can see. So a couple of my favorite searches, I've mentioned stochastics rising above 20 and the MPI 3-day here. So you can take either of those. Here you can see I've got an NPI crossing 3-day running against the global market ETF watch list as well as the sector watch list. And I've got the same thing here for stochastics crossing above 20 on both of those watch lists as well. I have covered this in the weekly market update before, and you know, maybe I'll end up covering it again coming up, because you know, if I go with the global market ETFs crossing above 20 with stochastics here and run that search now, you can see we do pick up 4. Obviously, we'd have to do more analysis than that. But if I quickly just graph those, and while Susan was talking, I was bringing up other things like NPM, net profit margin, just tracking some of what she was talking about with some of the companies like Dell example, for example. But here you can see, you know, in all these cases, we'll have stochastics down and coming back across 20. There you can see EWM, EWQ. That one's France, interestingly enough, that Susan was just talking about. There's the Eurozone, EZU. So as I said, Germany there as well. More analysis would need to be done there, but just to make sure everybody's aware that they can do that with any of their favorite searches. All right. So once again, thanks to Susan. We are going to need to close up here and do need to talk about a few other things. I want to make sure everybody's aware of the special presentation this week. It's entitled The Survival Rule Every Investor Must Know, and that one was presented by none other than Mr. Jerry D'Ambrosio, Manager of Educational Content here at VectorVest. All right, so if you haven't had a chance to check that out, check it out, whether from the software or on the YouTube channel. You find it in both locations. All right, we do have the Las Vegas 2-day investment seminar coming up. We're already into September, so September 20th and 21st. And Joy, thanks for those images. I was able to get both of them in here. So here you can see the link for the in-person. All right, so if you do want to go to Vegas, I think Susan probably wants to go to Vegas and roll the dice with all that money she's making in earnings season. But you can see the link there, www.vectorvest.com/Vegas, will take you to where you can register for the in-person event. If you can't make it to Vegas, we do have the live stream. So there you can see the link to register for the live stream, www.vectorvest.com/stream. And luckily we have everybody's bright, blurred faces in these images. All right, so that one coming up very quick now. And yes, we'd like to thank you. So I'll go to the last slide here. So as usual, folks, we do want to thank everybody for coming out and spending part of their weekend with us. I do want to make sure I thank Susan once again for always a very great and engaging presentation. And we do have Joey keeping us all in line here this time around. So we have to thank him. Now, Ray wanted to make sure that I mentioned this to everybody. Folks, you know, after every forum, we ask if anybody has any ideas for upcoming forums to let us know. This is your international forum. So if you have strategies where you're using VectorVest to great success and want to share them, by all means, we want to hear about it. The first step is to email Ray, and you can see his email address at the bottom, rayc@vectorvest.com. Whether you want to come on the international forum and present, if that's something that you're interested in, that could be made possible. If you're not interested in that, but do want to share your idea, we can help you out with that as well. But we definitely want to share all the successes that subscribers are having, and a lot of you are having great success We do want to share that with the rest of the VectorVest audience. All right. So as I said, first step is to email Ray, let him know, and we'll figure out the best way to go about it, whether you want to actually present yourself or, just have your idea presented by somebody else. All right. So with all of that said, I'll thank everybody again for coming out, sharing part of your weekend with us. And I'll say I did let the chat get away from me here too. All right. And yeah, you're welcome to those folks that have put thanks in there too. So as usual, stay safe and healthy out there. Um, all kinds of things going on all over the place. We hope everybody had a great summer and are all ready to get back into full swing of investing along with every other aspect of your life, kids in school, whatever it happens to be. So stay safe and healthy out there, but have a great rest of your weekend. And we'll see you back in the markets next week. Take care, folks.